From the financial centers of the world, this is Bloomberg Markets with Alex Steele and Guy Johnson.
Friday the 20th, 3 p.m. in London, 10 a.m. in New York, 30 minutes into the trading day in the United States. From London, I'm Guy Johnson. Alex Steele, of course, in New York. Welcome, everybody, to Bloomberg Markets this Friday. Alex, a stormy week, and we're not done yet.
Stormy week, stormy weekend, as we have a possible hurricane hitting the East Coast and moving way up in the Northeast, which is going to be pretty dicey as well. My takeaway twofold. One, it is definitely buy the dip, pretty much no matter where you are. European stocks now at the highs of their session. The Nasdaq 100, big tech, outperforming up 0.7%. But I have to wonder, Guy, how much of that is feeding into, say, a U.S. exceptionalism / safe haven bid? And that really comes to fore at the dollar. The dollar is off the highs of the session, but it's been a tremendous run this week, up now about 0.1%. Volatility moving lower as equities kind of find a bid pretty much across the board. Commodities, though, still trying to fight it out. Energy, the worst performing sector in the S&P. Oil off another 0.6%. It's the worst week that we've seen for oil, the longest stretch of declines during the day since 2019. Small caps still getting hit. So it feels like it's the safety in U.S. that we're going for right now in the market.
Yeah, it didn't take long to get to U.S. exceptionalism, did it?
Today. It really didn't. It took the Delta
point that out,
version.
like straight off the bat. You got the weather, you got everything you need. The weather's going to be a theme, okay, throughout this show. Alex is going to Montauk this weekend. Does she come back? I have no idea. We'll find out on Monday.
Do I have to anchor from a beach house? All things up for grabs.
Yeah. I think you're going to need an anchor at the beach house, potentially, as the weekend develops. Another factor maybe that's going to delay the return to office. Company after company announcing plans to push it back. Apple, the latest, it's pushing back from October until January. The reason, it's not the weather, it's surging COVID-19 cases, new variants, and the fear of breakthrough cases. IBM temporarily closing its offices in New York City as cases spike there. Here to talk about the latest kinks in the corporate's RTO plans, Bloomberg International Economics and Policy correspondent Mike McKee.
Yeah, you can bring me in on this because it's the economy that is going to be affected by, unfortunately, this is the kind of American exceptionalism we have right now on the COVID side. As you can see, the red line there is the last time the Fed met, and then the COVID cases have just been surging since then. And that has changed the whole calculus for a lot of people, including folks in the markets, about whether or not the economy is going to slow. And as you mentioned, Guy, companies don't know, but a lot of them are delaying their return to office and telling people maybe we stay out for a little bit longer. You can see all these companies in the last week or so saying, not time to come back yet. And you can add some more onto there. As you said, IBM, State Street also keeping people out of the office for now. And that is bad news for much of the economy because then the people who make their living off of the people who come into the cities to go to the office don't get the business, especially restaurants and shops and things like that. Some talk about how Madison Avenue in New York, a lot of stores going out of business because they just don't have the foot traffic anymore. And so that means, do we see the economy tank to such an extent that the Fed holds off? Maybe we hear more from Jay Powell on Friday. Well, the problem is the data don't show it yet. We're starting to see a little bit of an impact in some of the high-frequency data, like the restaurant reservations and seated diners from the folks at Open Table, but it's just not happening fast enough that people know for sure what is going to happen. So we continue to keep an eye on that, and we continue to keep an eye on the COVID impact around the country, and we'll keep an eye on companies and what they're going to do. And Alex, you're going to be out in Montauk. Good luck.
Good luck. I mean, like, I think, I don't know. Now I'm debating it. This has literally been all the newsroom is talking about. Not me going to Montauk, but the storm that's coming down. So, Mike, thanks a lot. That's a really great setup. Bloomberg's Michael McKee. So let's get more on the virus. We have AstraZeneca saying its coronavirus antibody cocktail was found to be 77% effective in preventing COVID-19 infections in high-risk people. Want to get the latest with Bloomberg senior healthcare editor Drew Armstrong. Drew, I feel like the therapies now are twice as important as they were 6 months ago, since it feels like herd immunity is just getting pushed off to Neverland.
Yeah, I think this concept of herd immunity has, in some ways, always been a little bit of a red herring, just because it's a moving target that really depends on the virus and how stable it is and what strain we're dealing with, and the level of protection and where that protection is, either because of past immunity from infection or because of vaccination. And there may be some places that have a lot of built-in immunity, but a lot of places that don't. And these pandemics, as much as we talk about them in a global way, tend to be really local for the people living them. I think that's one of the things that's going to be a challenge. But until we have a really stable virus or a broadly effective vaccine that gets every single strain of this thing, past, present, and future, the concept of herd immunity is really not one I think we should be discussing or thinking about, I think, in the way that some people have previously.
Drew, thank you very much indeed. We'll come back to this subject a little bit later on. And as Alex says, we're going to lean probably more on therapeutics than maybe we thought. Drew Armstrong. Let's talk tractors. Deere raising its full-year outlook. This as surging crop prices boost farmers' demand for new equipment. The earnings call is happening as we speak. She's been listening in as ever. Brooke joining us now, Brooke Sutherland, on what is happening here. Brooke, give us a sense of what the call is saying. Deere, from what I've read, sounds pretty positive.
Yeah, we just got underway with the call here, so not much more details from that yet beyond what's in the press release. But, the numbers look really strong. As you said, the market, for new farm equipment remains incredibly robust. You have rising crop prices. You have incredibly old equipment that farmers have held off on replacing for years, waiting for the kind of economic environment that would give them the confidence to buy those new tractors. Now, the question I think that investors and analysts have is this as good as it gets? Do we see continued momentum here, or has growth, in fact, peaked in farm equipment? They've had a lot of success in pushing through price increases, particularly in their larger agricultural equipment section of their business. But, costs are also going up. Are they able to continue to go on this pricing front, continue the strong momentum that they've seen, and offset those rising production costs? I think that's going to be a key question as well on the call.
Yeah, Brooke, and the cyclical is really kind of more out of favor now as the rotation happens to big tech. You can also see that reflected in that gap down for Deere. Brooke, thanks very much. Bloomberg's Brooke Sutherland joining us there. Let's round this out here. Tesla's inaugural AI Day carried a few surprises, including a brand new semiconductor that may be licensed to other automakers.
I'm not sure how to pay for it if it's fully open sourced. Yeah, unless people want to work for free. But I should say that this is, if other car companies want to license it and use it in their cars, that would be cool. This is not intended to be just limited to Tesla cars.
That was Elon Musk talking about what to do if he makes their own semiconductor chips. And obviously the big standout was potentially an AI that can pick up your trash for you. Ed Ludlow has the latest from San Francisco. I mean, that is it, right? Like, you can have basically a robot that can bend down and pick something up for you so you don't have to do it.
Classic Elon Musk, not yet finished with the full self-driving project, already keeping investors' eyes on the horizon with a fully autonomous robot. But the semiconductor, the D1 chip, was the most substantive part of that presentation. Highly technical, 2.5 hours long. But they said that this D1 chip has the best graphics compute around. And I already see market participants, industry analysts saying that this is quite a feat by Tesla. It will help them build towards Dojo, the supercomputer that will get their neural net over the line, make full self-driving a reality. But once again, no firm timeline for full self-driving to be deployed. We're still waiting on that. Yeah, we got a robot. Can I say I'm surprised? No. Walked out on stage, did a dance. Take a look at the pictures, absolutely incredible. The idea here is that the underlying camera-based technology that Tesla uses for full self-driving, the semiconductor, the D1 chip, and the artificial intelligence software can all be integrated into this robot that you see on your screen. And Musk basically positioned it as a replacement for human labor going forward. Like you said, small tasks like bending over to pick something up, putting a screw and bolt together, but also going to the grocery store to buy groceries. I'm happy to continue going to the grocery store, I do have to say. But again, we have no concrete numbers or timeline for when fully autonomous cars will hit the road. We do have another project in the works from Elon Musk and Tesla.
Yeah, I'm still waiting for my solar tiles, but we'll maybe put that off for another day. And I guess this is part of the challenge, trying to sift through what is reality and what is ultimately going to be fiction. Ed, it's going to be a challenge, but as you say, The eyes are on the horizon. It's all about what could be possible. We'll see what is possible. Ed Ludley, thank you very much indeed. Alex, you want one of those?
No, can you imagine how fat Americans are going to get if, like, the robot can go to the store for you and pick up stuff that you drop? I mean, all we're going to do is just sit like this.
Can't go to the gym for you. But yeah, I take your point.
You know what I'm saying? No, I don't think I'd want one. Maybe.
Yeah. We'll see.
Maybe
we'll see.
clean my house?
I think the older you get, the more likely you are to maybe want one, as bending down becomes more and more tricky. But we'll see.
That's a good point.
Not that I'm speaking from experience. Anyway, coming up, the S&P trimming its weekly drop. Analysts cautioning that options in the US may feel a little bit of volatility. We've had a bit of an expiry around the open this morning. Steve Sosnick, Interactive Brokers Chief Strategist. We're going to have that conversation with him next. This is Bloomberg. From London, I'm Guy Johnson. Alex Steele is in New York. This is Bloomberg Markets. Alex, the S&P poised for its first weekly loss since the end of July. It looks better over there than it looks over here. Markets Live reporter Kriti Gupta looking at the recent weakness.
Well, it's interesting, Guy. You're talking about looking better over here, and yet it was a risk-off week. I mean, take a look at this cross-asset risk-off. A lot of red on the screen. Some money going into treasuries this week. You've seen stocks lower, but really the story here is going to be in commodities. A lot of those growth concerns is really what's kind of spooking yields, especially coming out of China in particular, where that commodity demand is really front and center. The question here is this the reaction you see on a taper tantrum, on a 2013 kind of like reaction? And the answer is no, not really. This isn't the kind of correction you're seeing, but it really shows you that those Delta variant concerns are outweighing anything the Fed does for the market, which brings me to what is happening overnight, because that seems to be really what's been supporting a lot of the market reaction right now. Futures higher simply because that foreign demand coming into the equity market from Asia in particular, and really bolstering the S&P 500 to record highs. But Guy, not so much. You can start to see that momentum really waning on the right side of the chart. So what happens when that support fails? Does that mean an even further drop for the S&P 500? We don't know what the question is, simply because those record highs, they keep on coming, keep proving the bears wrong. But what we do know is the volatility keeps coming back high. You can see on the very edge that spike, the largest increase in the VIX index all the way going back into February. The question is this a blip, or does this continue into next week, Alex?
Really good setup, Kriti. Thank you very much, Kriti Gupta of Bloomberg. Okay, so some of that could also be what's happening in the options market. So we have a chart here that shows that some documents 2021's worst sell-off, and a lot of them occurred around monthly options expiration, which you get once a month for the S&P, and you can see those in yellow there. So what do you do? Joining us, Steve Sosnick, Interactive Brokers Chief Strategist. Hey, Steve, how much of this is due to the options expiry today? How much of this is like sort of fundamental reshuffling here? What do you see?
Well, Alex, thanks for having me. Some of it's some and some. I think there is a bit of fundamental reshuffling because, we're definitely seeing, IWM, Russell 2000, I should say, and some commodities telling you that the economy is not all that great, but yet we're gyrating back and forth. The gyrations, I think, are much more related to options expiry. And the reason being is that hedging tends to need to get magnified the closer you get to expiration. We could go into the math, but suffice to say that the nature of options means that you have to hedge them much more aggressively when things move the closer you get to expiration. And that sort of has a feedback effect. And that's why, when we've had bad news come out the week of expiration week, this week it was the Fed FOMC minutes. In July, there were some bad economic numbers, which coincidentally were ignored last week when they were equally bad. And in June, we had a Fed meeting that week and a press conference that didn't go well. These things get magnified when you're dealing with them in the couple of days before expiration.
Today we're up, though, Steve. Normally these expirations can be quite negative. In terms of the relationship of the volatility we've seen over the last few days and today's price action, once we've kind of started to clear through this process, what does that tell us about what comes next?
Well, first of all, it's important to realize that volatility means you're moving in either direction. When we have a day like today, I like to call it socially acceptable volatility. We're fine being up, over 0.5%, right? On the other hand, we're down 0.5% or 1%. It's past me the smelling salts. So there's definitely, a difference in how people react to movement. But from a volatility point of view, an up move and a down move both count about the same into the volatility calculations. And so I think what we're seeing today is just the back and fill, and relating to the Kritigupta's recent the report she was just doing. I think what we're seeing is money flowing into S&P from abroad and domestically, and it's kind of got blinders on. I hate to throw the TINA and the FOMO into everybody's face, but I think that's a big driver of it.
So if that's the case, where are the hedges being put on? Because the more we get data that shows us we're at peak growth, and the more we keep hitting record highs like we saw last week, the more I have to think that TINA happens as well as some downside protection hedging.
Yes, Alice, I've definitely seen what I would call the phenomenon of fully invested bears. I think that we have seen people buying. We have seen very solid demand for downside protection, even as the market rose. Now, to be fair, that kind of insurance has not paid off. But think about it: most insurance that you buy doesn't pay off. You're really hoping like heck that the fire insurance you have in your house doesn't have to be utilized. But that's really the nature of the options insurance, and I think people are starting to move into that. We have seen them moving into it. They've been wrong so far, but I think it's not necessarily imprudent to do. And quite honestly, it's a lot cheaper to put on this protection now than it was a few months ago. So it's not imprudent with what we're seeing.
What's the setup for next week? This time next week, Jay Powell's going to be speaking. Jackson Hole.
Well, I think Jackson Hole got taken off the table a little bit, and that's, I think, why we're seeing a bit of this relief rally. I think there's a little less panic in the air because of the feeling that the general consensus now is that Jackson Hole is going to be a little less exciting than it might have been. And now I think we're starting to look more toward the September Fed meeting, which means that I think you're going to see people focus more on the day in, day out than on Jackson Hole, which I think was really spooking people, especially in light of those Fed minutes. So,
Steve, on that point, where's positioning right now? Where's the cleanest?
The cleanest? Well, as someone who has the discipline of not fighting the tape, I think right now, you're still seeing people positioning into S&Ps. Those trends are still very much in place. We bounced exactly off the 50-day moving average yesterday. On the other hand, that sort of outperformance, that sort of narrowing leadership, rarely ends well. And so I would really like to see some sort of help from the economically sensitive sectors, either the Russell starting to pull out of its bit of a tailspin, some help from commodities like gold, like copper, oil. But as of now, I hate to say it, I'm kind of with the fully invested bears crowd, which is almost hold your nose, don't fight the tape on S&P 500, but be very wary because there's a lot of weird warning signs out there.
I love that, fully invested bear. I'm totally stealing that from you, Steve. Steve Sosnick, Interactive Brokers Chief Strategist. Thank you very much. All right, still ahead, a look at some of the flows this week, where the money went, where it didn't. China definitely playing a very big part in that. This is Bloomberg.
It's time for the Bloomberg Business Flash, a look at some of the biggest business stories in the news right now. I'm Laura Wright. More pay hikes for junior bankers on Wall Street. This time, according to Financial News, Goldman Sachs is extending the raises beyond investment banking. The firm reportedly has increased salaries for some employees in its sales, trading, research, and asset management offices. Starting salaries are set to rise from $85,000 to $110,000. The largest maker of agricultural machinery, Deere, raised its full-year fiscal outlook. Surging crop prices has led to demand for new equipment. Still, Deere's competitor, AGCO, warns that a massive rise in steel prices has caused a slowdown in tractor purchases. A shakeup in the baseball card business has led to the collapse of a merger. Mudrick Capital says the merger deal with Topps has been called off by mutual consent. That comes a day after Major League Baseball and the Players Union agreed to an exclusive trading card deal with sports apparel and collectible retailer Fanatics that will end the long-time dominance of Topps in baseball. That's the Bloomberg Business Flash. Guy, Alex.
All right, thanks so much. Well, equities, commodity has been weakening over the last week. Bloomberg News, Katie Greifeld's digging into the flows behind the price action for ETF Friday. Katie, what were the big standouts this week?
Well, Alex, it was interesting because there was a clear risk-off tone if you really dig into the flows. Let's look at the leaderboard because SPY was right on top. That tracks the S&P 500. As a Bloomberg News article phrased it this week, it tends to be where institutional traders park their money during periods of nervous trading, maybe to buy the dip. You also have SPLV in second place, and this is interesting because it's a low vol fund. It tracks the 100 least volatile stocks in the S&P 500, and it clearly saw a bid this week. If we look at the other end of the spectrum, over $1 billion exited IWM. That's as the reflation trade just continues to crumble, and that fund tracks small cap stocks, which are clearly under pressure as that growth outlook kind of takes a stumble. And it's a similar story with junk bonds. You see J&K on track for its biggest weekly outflow since about February, Alex.
Let's talk about what's happening in China. Chinese stocks, Chinese tech stocks in particular, Katie, being absolutely battered. Some are now calling Chinese tech uninvestable. There was a sense maybe that you wanted to kind of catch the falling knife at some point. Is that sense now starting to fade a little bit?
That's definitely the case if you look at a fund like KWEB. This is the Crane Shares China Internet Fund. Just an incredible amount of money had come into this fund over the past month as traders tried to do exactly what you're describing, Guy. Try to catch the falling knife, buy the dip. Not so much now. It's seen 3 straight days of outflows. Yesterday was the biggest single day outflow since March. That's because KWEB is down about 56% from its February peak, which tells you that losses really just got a little bit too painful because, again, Chinese stocks are really one of the only places where dip buying just hasn't really paid off.
Katie, great stuff. Thank you very much indeed, Katie Greifeld, running us through some of the flows that we're seeing this week. One of the factors that we've been watching really carefully this week, obviously, has been what's been going on with the dollar. An incredible ride. We've seen it pushing up, as you can see. This week, the Bloomberg Dollar Index up by 1.5%. What's going to happen next week? Jackson Hole, John Stolfus, Oppenheimer Asset Management Chief Investment Strategist, joining us next to discuss where we go next. It's been an incredible run. Has Jackson Hole really been taken off the table? We'll talk about that next. This is Bloomberg. Hi from London, I'm Guy Johnson. Alex Steele is in New York. This is Bloomberg Markets. Alex, let's talk about what's been happening with the dollar this week. It's been an incredible ride. I wonder whether we've basically had a taper tantrum, a mini taper tantrum, and it's shown up in the dollar. Now, there's a bunch of factors behind this, what's happening in China, what's happening with COVID cases, and of course, obviously, those Fed minutes, all factors maybe behind all of this. So what should we be watching for next? Well, the Kaplan comments make interesting reading today. Vincent Signorella, former trader and voice of Bloomberg's Global Squawk, joining us now. Vince, what do you make of the dollar run? Do you think Kaplan's going to put an end to it?
No, not at all. I think he may put a little bit of a pause on it, but I think as all we're going to do with the taper talk is push it out a month, maybe 2. It will come back into the frame. We may see some profit taking on the dollar. That makes perfect sense. It's had a nice little run, but sorry to say the usual, but I think it's a buy the dip story when it comes to the dollar. I think we're going to end up higher as we come to the year end.
Hey, Vincent. Do you think it's going to be a U.S. exceptionalism, we're going to handle stuff better than other countries thing, or is it going to be we're the first central bank to taper thing, or is it going to be we're scared of Delta safety trade thing?
Well, I think it's going to be all of the above, to be honest. I think we're going to start off with the Delta fear trade because realistically, we really don't have a handle on this. And there's a study out from Oxford University just a couple of days ago basically saying the efficacy of the virus wanes after just 3 months. The belief prior to that was 8 months. So booster shots are going to be a necessity to begin with. And then you have the situation where the rest of the world is not vaccinated anywhere near the developed countries. So it's not going to go away anytime soon. At the same time, we do need to get economies rolling. And, while the taper talk will be pushed off, as I mentioned, I think for a little bit, and it puts Jackson Hole in the rearview mirror already, I think. At the end of the day, I think we as Americans, we tend to sort of bat on a little bit more so. And we're probably just a little crazier than the rest of the world, and we will come back to work sooner.
Yep.
It's actually true.
But you got 3 senators now with breakthrough infections. I wonder whether or not that is being replicated elsewhere. That huge source of concern. Vince, I have to just say that is a heck of a chair you've got going on there. It looks like you're being hugged.
Where did you get that?
It looks like you're being kind of hugged. As the director says in my ear, that is a gamer's chair. You're taking this setup seriously.
It is a gamer's chair, and you guys are somewhat familiar with my setup that I'm looking at about 5 screens in front of me. So as I whip around back and forth, I need to be comfortable. So I tried 2 other chairs and it didn't quite work, so I went with this one.
It's a serious setup you got going on there. You're rocking there. Final quick question. We were talking to David Snedden of Credit Suisse yesterday. He's the TA over there, head of technical analysis, and he was saying you get a double bottom in the dollar, you could be really setting yourself up for some big upside. What is your take on that?
I think he's right. I think the way I look at the dollar, it's kind of like an either-or story, if you will. We get a hold of the Delta variant, and our economy goes back to work, and we of the sort of G4 will be tapering sooner than the rest, and so that lift in rates and that yield spread differential favoring the dollar will see the dollar go higher, or the other side is that we lose the bit of the race we have with the Delta variant, and it spreads globally more so, and an economy's slow, and then the dollar becomes a haven trade. So I think either way, both from a technical and a fundamental standpoint, the dollar's a bid story, I think.
All right, Vincent, always good to see you. And I should point out, you are exemplifying the non-RTO thing. You work in your basement in a 5x5 with all your screens and your gamer's chair. This guy's not coming back to the office anytime soon. Vincent,
probably right.
Good to see you. Bloomberg's Vincent Signorella joining us there. Joining us for more, John Stolfus, Oppenheimer Asset Management and Chief Investment Strategist. John, how are you balancing all of these risks? The latest move has been to go back to growth, back to big, large cap tech, less into value, less into the Russell. How do you play the Delta, the Fed?
Alex, the way we're playing it, broad diversification. First of all, thanks for having me on the show. But broad diversification. So we are overweight the U.S. We favor cyclicals over defensives, and we are broadly diversified across market capitalizations. And we have, in terms of growth and value, we're into growthier value and garpier growth. And it's working very well so far. On a day-to-day basis, this market rotates and rebalances on the whim of traders and fast money spinning through the market. And it works quite well for intermediate to long-term investors like ourselves so far. Knock it on wood.
Yeah, I do that. But I think Guy means woodhead, somebody once told me, so maybe I've got a reason to do it. Let's talk about kind of stocks versus everything else, though. Are you a friend of Tina? Do we need, is it just stocks at the expense of everything else?
No, we think, Guy, you have to be really selective. So you know what, if you're doing if you're doing the Tina, that you just have to be in stocks, no alternative. We think that's a mistake. You want to be selective. You want to really look for well-established companies, great managements, either innovators or those who use innovation, and be positioned for the intermediate to long term. Essentially, be in stocks that if they were ships, they would have deep keels and very strong bows to deal with any volatility, any choppy seas or really stormy seas you might see. That said, we think equities are headed higher as we digest the response to the COVID variant and consider what the Fed's next steps are.
So what is your target for the end of this year and then next year? And I'm wondering, what are your inputs to that? Because you could, on the one hand, take a look at, say, the Fed balance sheet versus the S&P, both straight lines up. On the other hand, you look at the sort of risks that are coming out, inflation's going to be overshot, et cetera. What are your inputs? What are your targets?
We'd say all of the above, essentially. But what we're really looking for is revenue and earnings growth trends is what we're looking forward to here. And we're looking within a diversified S&P 500. Our target is 4,700. We were the first to upgrade to that level just a few weeks ago. And we're looking for about $195, $196 worth of earnings for this year. In terms of where we're going to go for next year, I got to tell you, I think that's an open thing. In December, we'll likely address where we expect 2022 to look like for the S&P.
If we get a taper, are stocks more exposed to that taper than bonds? Normally, you'd think it would be the bond market that would really feel the full force of a Fed taper. Is it going to be the same thing this time around?
I don't think so, Guy. I think what we have is everybody wants the taper. So long as we get the hyper risk of the variant put aside, it would seem to be that we have levels of inflation right now evident beyond the supply chain, but from higher wages and certain disruptions in terms of the global supply chain still overly exposed to and being one country centric. We'd say the market wants to see the Fed begin to taper, and the Fed has been absolutely fabulous since Bernanke's time at being communicative. It's transparent, and in that it is not the Federal Reserve of Alan Greenspan, and that's the big difference here.
John, enjoy the roof tonight. I know you got a great one up there at the building. Thanks for joining us. Have a great Friday.
Thanks.
John Stolfers, Oppenheimer Asset Management Chief Investment Strategist. I want to take you to Moscow. There is a press conference currently taking place. The Russian President Vladimir Putin is hosting the outgoing German Chancellor Angela Merkel. Merkel speaking right now, talking about what she has discussed with Vladimir Putin. Remember, she speaks Russian, telling Putin apparently that the Navalny imprisonment is, quote, unacceptable. The German Chancellor also saying that the Ukrainian gas transit agreement must now be extended. She goes to Ukraine this weekend. Vladimir Putin talking about the fact that he and Merkel discussed Belarus, Ukraine, and also Iran. They also, of course, discussed what was happening, Alex, in Afghanistan.
Yeah, and the clock countdown continues to Merkel as the presidential election happens the end of September. Hey, Guy, I want to update us on what's happening in Deere. That stock now down almost 4%. This, to me, really encompasses the conversations that we've had with Steve as well as with John in the last half hour. On the call, Deere is saying supply chain challenges are going to continue into 2022. Costs will become more challenged in the fourth quarter. It just feels like they may have blown the lights out on this quarter. They may have pricing control this quarter, but coming up, there's no ease to the pain that they're seeing in terms of the supply chains and then rising costs. And that really encompasses the issue that we're dealing with when it comes to a lot of these cyclical names.
Absolutely, and it's going to be interesting to see whether farmers, given these price rises keep on coming, will they continue to buy the vehicles that they've been buying so aggressively? As we were hearing earlier on from Brooke, they've delayed. They're now at the point where kind of much of this machinery is required.
Yeah.
Can they put it off any longer?
We'll talk about delays. Coming up, we're going to look at the office delays. Those are coming back, really underscoring the challenges that businesses are still facing in returning to normal. We're going to cover the latest on the virus with Dr. George Rutherford of the University of California, San Francisco. I'm now worried about return to school. This is Bloomberg.
This is Bloomberg Markets. I'm Laura Wright. You're looking at a live shot of the principal room. Coming up, Governor Mike Dunleavy of Alaska. That's at 12 p.m. in New York, 5 p.m. in London. This is Bloomberg. Let's check in on the Bloomberg First Word News. I'm Laura Wright. Bruce Springsteen will be just one of the headliners when New York City marks its emergence from the worst of the pandemic with a free concert in Central Park tomorrow. Springsteen will be part of a lineup that ranges from rock to rap to classical. Other performers include Paul Simon, Patti Smith, LL Cool J, and the New York Philharmonic. The new surge of coronavirus cases has prompted Apple to delay its return to corporate office from October until January at the earliest. Apple does not expect to shutter its offices or retail stores. Meanwhile, Charles Schwab is also delaying its return to office plans to January at the earliest. It's also increasing employee pay by 5%. Tropical storm Henry is set to slam into the U.S. northeast as a hurricane on Sunday. It's still not exactly clear when Henry will make landfall. It could happen anywhere from Long Island to Massachusetts, bringing heavy rain and a flooding storm surge. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Laura Wright. This is Bloomberg.
All right, thanks so much, Laura. It says Alex pick up, but Guy, I'm just going to throw it to you because you're just going to go make fun of me trying to get to Montauk and back this weekend.
Absolutely. Thanks for the opportunity. I will take that with both hands. Alex has decided that this weekend she doesn't want to go to the concert. She basically wants to go to Montauk. My understanding is that Long Island is in for quite a Sunday.
Yeah, I'm a
I
little
expect you
worried.
back here on Monday. That's all I'm going to say.
I got to say, if I get stuck in Montauk and Guy has to anchor solo on Monday, he is going to have a field day with that. Because apparently, I didn't know this, the LIRR shuts down at like 35 miles an hour per wind, and the storm's going to start like Saturday night. If it was like Sunday morning, Sunday afternoon, you'd be fine. But I don't know, Saturday night, that feels a little dicey.
Does, yeah. It's going to be quite a weekend for you. Henri. Are we doing Henry or Henri? I think it's Henri.
I've been told it was Henri. So I don't know if it's going to sound
basically,
better.
you guys are going to get
way.
knocked around by a French storm, as far as I can tell.
I'll have to drink some French
It's going to
wine.
be, yeah. That's one good reason. But yeah, no, I think it's going to be. It's an interesting weekend to have a open air concert. And it's going to be, I think it's a further factor that's going to delay people coming back. All those people that were thinking about coming back to the office is another reason why they maybe don't want to do so. The Delta variant, obviously, probably one of the biggest factors in their thinking. So let's talk a little bit more about that. We've got 3 senators now confirming that they've had breakthrough infections. They're fully vaccinated and they are still suffering from coronavirus. This is going to be something that I think a lot of people are going to be thinking about as they map out their path back to the office post-Labor Day. Dr. George Rutherford, University of California, San Francisco professor of epidemiology, joining us now to give us his take on this. Doctor, how should we be thinking about these breakthrough cases? Is this something that we should be afraid of? People are trying to make decisions about whether or not they're going to be coming back to the office, whether they're going to be reopening their businesses. They're going to be worried that even those with vaccines aren't going to be fully protected, and those without vaccines obviously are going to be worried that they're going to pick up the Delta variant. Walk me through how we should be approaching this.
Sure. So the first thing to realize is that with any vaccine preventable disease, if 100% of a population is vaccinated, every case will be a vaccine failure. And there's a nomogram you could look at. And as we approach 80% vaccination, say in California, we're going to expect, at least half of the cases to be breakthrough cases. It's just the way that it works mathematically. I think that obviously it's a concern. And I would have said tough it out if you'd asked me last week. But now with the White House and CDC announcing that we're going to move to a 3rd dose of mRNA vaccines, I'd say, well, that's our ace in the hole. We can wait and get a 3rd mRNA vaccine. So if you're vaccinated, say in January, that would be in September. If you're finished vaccination in February, that would be October. And then you can kind of move forward from there.
So, Doctor, the studies are sort of split, it seems, whether or not we actually need that booster. And I'm wondering how all of this time-wise circles into going back to school. When we have lawsuits over mask mandates in many states, when we don't know, when little kids can't get the vaccination, can we actually see a return to full schooling in person this year?
Yes. I think that's pretty clear that that's going to happen. What I know out here in California is that we're full speed ahead. I can tell you in San Francisco, for instance, 86% of 7 to 12-year-olds have been fully vaccinated. I'm sorry, 12 to 17-year-olds have been fully vaccinated. We expect FDA to authorize vaccine for 5 to 11-year-olds in late September, early October. I think that, with the staff vaccinated, with teachers vaccinated, with most of the parents vaccinated, we're not going to have that much of a problem. Now, obviously, there'll be cases. We've seen cases already, but they're almost invariably in children whose families have not been vaccinated. So you kind of have to take a step back and say, this really does not represent school transmission. It represents children who've been diagnosed at school. Then we have to proceed with how we isolate them and how we quarantine people that they've come into contact with.
Professor, I'm just looking at my screen. Regeneron just hit a fresh record high in the stock market. I wonder whether that is a sign maybe that people are expecting monoclonal antibodies, all the other therapeutics to be used a little bit more. At present, Professor, do you think we're underprescribing on the therapeutic side? Do you think we could be doing more there?
I think we are underprescribing on the therapeutic side. Now, don't ask me anything about stocks and bonds. I have not the slightest idea, thankfully. But I think we have been underprescribing on the therapeutic side, and the Regeneron, remdesivir, the things we have available to us continue to work. They'll work with Delta variants. At least for now, they're working with Delta variants, and we use them in people who are asymptomatic but have risks for progression, and they work really well. So I would hope that we'd be using more of them.
Doctor, do you think that we will see lockdowns again at some point in the next 8 to 10 months?
No, I don't. I think that's unlikely. I think we might see some business restrictions. For instance, places where people might come into lots of contacts like gymnasia. But I think really the trend you're going to see are vaccine passports, or what we won't call vaccine passports, but it will amount to vaccine passports, that people will have to prove that they've been vaccinated in order to enter establishments. And I think we'll see that more and more and more and more, at least in the states that will permit it. And I think that's going to be the alternative to shelter in place or stay-at-home orders.
Yeah, definitely what the markets will be watching. Doctor, thank you very much. Thanks to Dr. George Rutherford, University of California, San Francisco. It feels like the problem, though, is the longer you don't go in the office, the more that becomes kind of the way of living, and that really changes the economy in some ways. All right, we'll talk more. This is Bloomberg. So when Guy and I are both in on a Friday, which by the way hasn't happened in quite a long time, we're going to take a look at our favorite charts of the week. And here's one of mine. So this is actually palladium, and this feeds into a ton of different stories that we've seen. Now, palladium has gotten just simply crushed, down 12% just this week. You're looking at the worst week for palladium in almost 17 months. A couple reasons why. Yeah, we get the stronger dollar, we get weaker China. That's affected all of the commodities. But one in particular that really affects palladium is what's happening in the chip sector, because as automakers push back their amount of autos that they can actually produce this year because of the chip shortage, that directly hurts palladium that is using catalytic converters. So there is a real trickle-down effect. And currently, Guy, IHS Markit has said that the second quarter of 2022 maybe at the point when we're going to see supply stabilization for those chips. That's still quite a long way off. You make less cars, you use less palladium, you see weaker palladium prices. We're now very oversold, too, at 22 on the RSI.
I'm so glad that you're stepping out of your commodities comfort zone to bring us that chart.
God. I didn't say backwardation or contango, okay? So
I was
take that
about
as
to
a
say,
win.
I'll take the fact that there was no backwardation in there as a definite sign of progress. but I think we'll crowbar you out of that comfort zone at some point. Actually, do you know what? I think the connection, I hadn't drawn the connection between what is happening in the chip sector and what's happening
go to your really
precious...
boring chart. Go to your boring chart about the S&P. Just go.
This is a fantastic chart. Double Trouble. It's got a better title as well. I'm going to point that one out, though I didn't come up with that. We've seen a lot of turbulence this week. The question is, are we done? And maybe this chart points to the fact that maybe that's not going to be the case. It's a fantastic chart. Basically, it's stairs and lift shafts, elevator shafts, escalators and elevator shafts, I should translate. And basically what you've got here is a series of doublings. So the green, S&P doubles, up by 100%. Then you get a correction. That's when you get the elevator shaft. The elevator shafts have not been that big, but we are basically due one. And that is the point. This goes all the way back to 2000. And it's really kind of, if I keep talking, Alex can't criticize this, by the way, as well. We're up 100% now. Does that mean that we're in train potentially for another bigger correction? The elevator shaft may be coming.
So maybe,
anyway,
so your chart's basically like U.S. stocks go up. Cool.
Well, I'm trying to push back against the U.S. exceptionalism as well, because they do come down at some point. Kit Jukes is joining us next. This is Bloomberg.